Hey guys, I'm Danny. This is Capital Cosm, and I have a question for you. But before we get into that, let's look at this chart on global direct primary energy consumption across time. What's interesting isn't the exponential trend up in energy consumption. What is interesting is that when you look at all of these different sources of energy, we've never replaced one less dense source of energy with one of greater density of energy. Whether it be coal. Coal is archaic. We've been using coal since the industrial age, but we're using more coal today than at any other point in history, and that includes us adding in renewables into the mix. Things like wind and solar, which are what would be considered intermittent forms of energy. Um, Being that if there's no sun out, if it's cloudy outside, if it's dark outside, there's no solar power. If there's no wind out, there's no wind power. But regardless of the conditions of the day, we're still going to extract energy from things like coal and natural gas and nuclear. Now, keep this chart in mind. I'm going to shift into a different chart. And this is the U.S. oil inventory versus global energy capex chart. We're going to look at this blue line here, which signifies the global energy capital expenditure. And this essentially signifies the amount of money or capital that's being pushed into energy. Now, notice something of interest here. We peaked in capital expenditure and energy in 2013. And capital has been a desert. This sector, the energy sector, has been a desert for capital for almost a decade now. And so how are we going to incentivize more energy production to meet this 200-year trend consumption demands when there's no money in the system? There's no supply. And that's why my question to you is, do you think this means that life is going to get easier or harder in the future? Let me know in the comments below. And if you like this kind of content, please consider subscribing to my channel. I provide insights like this on a near daily basis. And I'd really appreciate it if you subscribe. Let's take a look at this article from Goldman Sachs. From oilprice.com about Goldman Sachs. Goldman Sachs expects a bumper year for commodities in 2023. It says, Goldman Sachs believes a supply shortage and insufficient investment in new supply will drive a bumper year for commodities in 2023. The bank expects the S&P Commodity Index to post a 43% return next year, led by oil, gas, and key metals. While the first quarter of 2023 may be a bit underwhelming, due to an economic slowdown, a new supercycle in commodities is looming. First and foremost, guys, standard disclaimer, this isn't financial advice. I'm not a financial advisor. This is just my opinion. Okay? So, Goldman Sachs is telling us we are looking at shortages up ahead to the point where, all things being equal, if you're in the energy space, the commodity space, they're anticipating a 43% return next year. Now, that's caveated with a slow beginning to the year, precipitated by the economic slowdown. But the eventuality will manifest itself. We are in a molecule crisis. There are simply not enough molecules in the world, whether they be oil-derived, gas, coal, uranium, to meet the needs for the entire world. And all things being equal, this is why I'm positioned in energy and commodities. Life is going to get a lot tougher. It just is. The era of abundance, I think it's come to a close. And a lot of commodity analysts believe the same thing. If you're a baby boomer, where you came into your adult years in the 80s, you've witnessed you've seen nothing but a stock market bull market, a stock bull market, let me say, for the last 40 years. You've never been in an environment where money hasn't been cheap. We're exiting that time. We've pretty much dug out all the low-hanging fruit when it comes to oil, when it comes to key metals like copper, nickel, especially metals that are key to developing this EV green future. You're going to have to extract, again, more metals in the next 8 years to meet these 2030 goals for all EV vehicles on the road, to develop the batteries for these vehicles. So let's take a look at the Thomson Reuters Commodity Index. Let's look at it from a 1-year perspective. So looks like we've been kind of chopping sideways since the summer here. And we started off strong, but it looks like, we've been in this kind of downtrend. The good news is that if we can clearly see a resistance line form from June all the way out until November to when we finally broke through this resistance line, and we've kind of been just trailing it sideways. We've retested it, denied the retest, and we're still above this resistance line. So the one thing I always like to talk about is the strength of a resistance line is predicated on the number of times that it's tested, as well as the duration. Now, the duration isn't really that long. It's been 6 months since June, but we've tested it a few times and we've broken out of it. So commodities have been kind of consolidating. So what's the big deal? Are they really about to break out? Well, let's take a bigger picture view of things. Let's look out from a 5-year time horizon. This was the bottom in commodities. This was in April of 2020. And we went from being indexed at 100 to the high of 333. So we saw a 3.3x in the commodity asset class within 2.5 years. So what's a little consolidation? We were bound for consolidation. And it's actually a healthy thing. It shakes out all the weak hands, all the low conviction people. And by the time we're ready to rally again, there's a lot of capital that's willing to flow. We've kept all the strong hands on our side. So let me know what you guys think. Do you think life is about to get a lot harder or easier? And also, consider this. We may be heading out into a recession, maybe a depression. I don't know. But if supply crashes faster than demand, then net price is still going to go up. I'm going to say it again. You can have an environment where demand goes down, but supply is destroyed at a greater pace. And in that environment, you're going to see commodities rally. If you like this video, give it a like. Don't forget to subscribe. Let me know, is life about to get harder? Until next time, guys. Bye.